What's up, everybody? I'm Mike Huie from Clover Trading, and today we're going over 6 end-of-the-year lessons from a 7-figure day trader. When I think back on my year, the first lesson that comes to mind is stay in your lane. And the stocks that I want to specifically refer to is the whole banking crisis that we saw earlier this year with First Republic Bank, Silicon Investment Bank, and a number of the other ones, SIVB, before it got delisted. And I think part of a day trader, one of the hardest things to do is separate, what you are here and what you're meant to do and what part of you thinks that you're here to do everything. I think it's very easy as a day trader to think that your job is to trade all sorts of any type of volatility that may present itself. And that may be true at some granular level at everyone's individual wantings to get out of the market. But in reality, the most important thing in the market is to stay where you're consistent, stay where you make money, stay where you have familiarity, stay where you have understanding. And one of my biggest mistakes was I was trying to dip buy First Republic Bank earlier this year. I think I was getting in towards these lows of 12s because mainly I was a First Republic Bank owner and I didn't think that they would let it go under. And that's purely emotional. It's not based off anything I know from the banking sector. I've never been in a banking crisis before. I was not a trader back in 2008. I did not know what was going on behind the scenes. So at the end of the day, it's just blatantly gambling. And the only reason I was really in the seat to do that is because I am a quote unquote day trader. So I saw some opportunity where I thought I could nail one of these bounces. But instead of having a quick day trader approach, I really wanted to get in for a long-term type of price. And I paid the price when it started to delist. I definitely cut the loss in here. And one of my bigger losses to date is this whole banking crisis sector of a play. And when I go back and review my trades for the year, the one thing that I keep coming back to are what are the losses we can learn from? What was necessary and what was unnecessary? And this whole banking trade in the first place wasn't necessary. Look, I'm a small cap trader. I like to short sell small cap stocks that I think are pieces of crap. And that's not what I was going after on First Republic Bank. It was completely out of my lane and I paid the price. And it's one of the bigger negative trades about my year this year. So that's something that I would definitely want to do better on and try to avoid and or be just hyper aware of as we're trading the market, because again, there's so many things to trade, but where do we truly have edge and consistency and familiarity and understanding of future events and prices? And that's not what we had here in First Republic Bank, or at least not for me. So that's lesson number one. I think the second lesson that comes to mind when talking about this year and what I've learned is to always have a business plan. Understand that trading in itself is an independent business and you need to be aware of your costs, your expected revenues, and clearly have a defined business plan with what your intentions are. As a stock trader, you're gonna start off as trying to nail one setup, but eventually your arsenal grows, more aware of the market, more educated, and allow yourself to do other things. But everything needs to be done with very specific intentions. So lesson number 2 is write a business plan. My issue this year was one of the trades that I nailed perfectly, I didn't have enough size to really justify the reward that I have today. One of my plans for this year was to definitely buy the dip on the overall markets. Everything had crashed so hard off of the 2021 highs that I figured eventually we'd have a rebound move. And based off all the data that I had collected, I knew it was soon coming into 2023. The issue is I didn't have a business plan. My plan was to buy all the stocks that I know to be some of the strongest stocks. So we're going to talk about the Qs, Google, Amazon, and a couple others. My issue was I went into it without a business plan, without some kind of written out plan that said, hey, this is how much I want to collect of my favorite stocks. This is how much I'm going to risk, and this is how much I expect to make. No, I kind of treated it like a casino and put a nefarious amount of money. And what I mean by that is it wasn't structured. Google had some amount, the Qs had some amount, and Amazon had some amount. And here we are at the end of the year, the Qs roughly $100 off the lows. And there's a number of stocks that I was buying at the lows. Tesla, very nice off the lows from this year, 100 to a high of 300, closing in at about 250 with the last month to go. Amazon was another one that's bounced really nicely, roughly 40% from this $100 level, which is where I got in. Google, also a very nice bounce from that rough $100 level, about where I got in on this stock as well. And these are all phenomenal percent returns, and I think really a nice trade if you take it as a basket of a trade thesis, which was trying to buy the bounce in the market. Again, the issue was I kind of didn't have the trust. And again, there could be a number of reasons as to why I didn't have trust in the setup. But at the end of the day, if I'm buying, Google, Amazon, etc., 30, 40, 50% off their highs, I should really be having a plan that is very structured, that I know exactly how much position size I want to take, what is my positioning, what is my risk going to be. And at the end of the day, I'm undersized on a lot of these. And what is in actuality a great trade, it ends up not being very influential in my year because my position sizing was off. And there's nothing I can do about it now. The trade has come and gone. And it's because my intentions at the beginning of the year were not fine-tunedly set. One of the biggest mistakes I have is Coinbase. I wanted to buy the dip on Coinbase. And again, the reasons aren't as important as much as what was the trade plan. I got in at 37 down at the lows, and here we are up at 146, and this is not a record trade for me. And that's because, again, when I was buying this, I didn't have an exact idea of how much I wanted to own, so I ended up with very few shares from a very good average, which is true across whether I'm trying to do this strategy, this trade thesis, or I'm trying to trade small caps. Everything needs to be very intentional and structured. At the end of the day, again, trading is a business and you're an entrepreneur, and everything about your trading and about your business you need to know like the back of your hand. Yeah, one of my biggest mistakes this year, and although I didn't see this as, what was going to define my year, had I taken this trade seriously, whether it's any of these stocks that I bought the dip on, if I had intention behind buying the dip, this alone could have made my year, let alone, the profits from other revenue streams that I have that aren't correlated to this theme of a trade. So that's lesson number 2. Always have a business plan and trade with intention. For lesson number 3, I'm not going to actually use any charts. This is just a direct personal message to anyone that's been in the trading sphere or is looking to get in as a beginner. The most important thing that I have found in trading is networking with the community. The FinTwit community, especially small cap, the niche that is small cap, that exists on Twitter, is this savage group of animals that they're very vocal on Twitter. There are some really, really good traders providing some really good information who have been trading as long as me, 5 to 10 years, who are, trading in itself is a very independent and lonely journey. So most traders are looking to branch out on Twitter, whether in the form of hate or in the form of feedback. There are a lot of traders looking for spaces, looking for networks, looking for friends, looking for people to have commonalities with. Where I've gotten today, I would not have been able to get to without the people that I met day 1. And even the people I'm meeting in year 7 and year 8 have so much value to add. There are so many people that I have made millions alongside with. And these people, when I go up to them, these are the types of people that I can ask, what are you doing with your money? How are you best diversifying or investing? And I can branch off and get so many ideas. And it's not just the people that I started with, it's the people that I continue to network with and make relationships with. Again, the Twitter environment are a bunch of savages, but there are some really good people within that environment. And I urge you guys to get out there, obsess in your passion, go to as many networking events as possible. 2 events that I would recommend. Number 1, Traders for a Cause. I've met some really cool traders from Traders for a Cause. It's a charity event. All the proceeds, in my understanding, go to charity. So it supports a good cause, but at the end of the day, it gets a lot of good traders together to learn things and to brainstorm and to network and connect. So I definitely recommend looking up Traders for a Cause on Twitter or on YouTube or Google. And the other place, there's tons of boot camps. It's not just Clovers that put on boot camps, but I obviously am biased, and I think our boot camps usually are really good networking events, because again, it was at boot camps that I personally got to meet my heroes that, pretty much taught me everything I know, the person that I try to emulate in my trading, where I've tried to take what he has presented to the community and craft it for my own, is Tim Grittani. And I met him at in-person events. I've also met Short Bear, Nathan Michaud, Tim Sykes, Jack Kellogg, Dom, Kyle, all these guys I met at in-person events. So part of the reason that we put on in-person events is to provide you guys that opportunity, but also have the opportunity to teach you hopefully something cool that you didn't know about the markets and the dynamics of the market. So
ever dreamed of trading like one of the Clovers? Well, it all starts with the right broker. Clover Trading and Centerpoint Securities have teamed up to supercharge your trading experience by joining Unlock the Power of CP Edge exclusively with Centerpoint. We're talking top-tier trading tools worth over $6,000, all at your fingertips. Get ahead with real-time scanners, cutting-edge news, and a tailor-made trading journal. Experience trading like never before with superior short inventory, personalized support, and interest on your idle funds. Plus, you can get competitive pricing that fits your trading style. Ready to elevate your trading game? Click the Clover Trading link in the description below to get exclusive deals with Centerpoint Securities. Now let's get back to the content.
Whether it's boot camps or it's charity events, definitely put yourself out there and meet as many traders. Try to have a good sense of judgment. Again, not everyone in the trading community has each other's back. It is kind of a dog-eat-dog world. One person's loss is another person's win. You show profit, people are going to hate on you. You show losses, people are going to say other things. So it's a weird niche, but there are good actors within the niche, and they are on Twitter and they are at these events. So put yourself out there, network, and connect. That's lesson number 3. Lesson number 4 goes hand in hand with lesson 3, and lesson number 4 is check your ego at the door. There's 2 things that you should always be reminding yourself on, and one comes to trading and one comes to reputation. And again, it kind of piggybacks off of lesson 3, but as far as checking your ego at the door, there is inherently with any stock you trade a 50-50 chance it's going to go up or down. So the question is not can you be right? It is should you be right? Does the trade you are taking make enough sense with your business plan, with what you specifically know the results of, like the back of your hand? Or are you just trading on a whim thinking that you're smarter than the market, right? Check your ego at the door is a very important concept to keep in the back of your mind, because again, at any moment you can win in the market, but it must be differentiated between luck or hard-earned skill, from data tracking, from looking at charts and mapping out trades and doing your technical analysis and looking through the filings and the fundamentals and creating that edge and then winning on those stocks that you actually have those edge on. That's where you can find a lot of success. And when your ego thinks that just because you won, that's when you're trading well, you have to be very aware of, should you win or can you win when taking a trade? The other side of checking your ego at the door is it comes down to networking and connecting. One of the things that the Clovers we pride ourselves on is we don't get into a lot of the Twitter beef. We don't want to send hate. We don't want to critique people's trades. We don't want to get involved in the nitty-gritty of calling people out and being petty within the industry. And there's so many people that are, and it kind of blows my mind. And throughout my career, I've stayed away from it. So have the other Clovers. And because of that, we've been able to meet the other cool people that have also stayed out of a lot of the drama that goes on. So again, check your ego at the door. You don't know better than someone else. Your business is not someone else's. Your business is your business. And as long as you just do what you're here to do for yourself, people will acknowledge you and you will climb the ranks and you'll go to these events and you'll start to network and meet some really cool people. And it makes having this as a career so much more tangible when you start to network with other traders and they want to network with you. And the people that don't want to network with you, like if you're someone that's not going to get talked to very often, it's because you probably have a huge ego about the way you trade or about how people should trade and if it differs from yours. That's lesson number 4. Boo, data, am I right? Actually, quite the opposite. Lesson number 5 and 6 have to do with data. The sooner you dive into data and actually having statistical representations of the setups that you are going after in trading in any types of markets, the sooner that you're going to have confidence and consistency within your trading. For a long time, I got away with not backtesting, and you can not backtest and be profitable. I'm living proof of it, but it takes a lot longer. It took me 2.5 years to become consistently profitable. That's a lot of time trading very small size. And people who usually backtest their data find profitability a lot sooner than 2.5 years. Now, you don't have to make data something that's so intricate and confusing that it gives you analysis paralysis. Start very small and very wide within your net. Track gappers. This is just a simple gap sheet, right, that I've created for you guys. And what this pretty much does is track stocks that gap up a certain amount every single day. And based off the system that I am creating, I have very, very basic columns that I'm implementing that, I'm trying to derive types of dynamic sizing that I can use to go after this setup. And it's pretty simple. It's really just a profit loss column, an expected win column, and an expected risk column. And at the end of the day, I have a loss win ratio, what that would look like at the end of the month, and what the, win loss ratio would look like at the end of the month as a percentage. And just basic things like this can really start to spin the wheel and go down the rabbit hole of what is backtesting. And you can find some really interesting and fun. Honestly, this is the funner part of trading, in my opinion. The fun part is not risking money and doing the whole boring rinse, wash, repeat process. The fun is finding edge and finding strategies that have huge win rates and huge reward capabilities with limited risk. And that's where you're going to find it within the data. So I urge you guys to use, this is a website called Spikey. I've been using them this year. It's been fantastic. It pretty much does most of the things that I want it to do. And it's a way that, people who aren't good with coding or have no real Excel experience can can get experience. So I definitely recommend Spike Eat and again, backtesting and having data on what you're trading. Lesson 6 is to track your trades. Ladies and gentlemen, I cannot stress how important it is to track your trades. You need to know, regardless of what the setup is doing, how are you executing within the confines of this setup? What are your rules that allow you? What are the mistakes that you are making? These are the types of things that you need to review nightly, weekly, and monthly in order to refine your process. Tracking trades is one thing that Kyle Williams and Jack Kellogg say is the most important thing for their trading. And it really gives you a comfortable place for you to review. Without game footage of how you were trading, entries, exits, risk reward ratios, etc., you're absolutely trading blind and you're trading based off feel. This is why the Clovers and specifically Kyle Williams has created something we like to call the $1 million money sheets. This is a comprehensive way that Kyle Williams has built out to track his trades. It comes with a template and a 5-hour guide as to how he utilizes this template to track his trade and have a better understanding of his trading. When you have a better understanding of your trading, whether through Kyle's $1 million money sheets or any of the other websites that do provide similar aspects, this is how you're going to gain confidence in your trading. This is how you're going to know what setups you do the best on, what setups you lose the most on, what setups you have the best risk reward on or the best understanding of. Where are your better win rates? This is information about your trading that you might think that you're great at breakouts and you love breakouts, but at the end of the day, if your stats don't say that breakouts are your best setup, you have to react to that information, but you have to know that information more importantly. So these are the 6 lessons that I would impart to you from my 2023 year of trading. Hopefully you guys can implement this into your trading and make 2024 an even better year. Thanks, guys.